Hello and welcome to the program. Tingo Group, owned by Nigerian fintech businessman Dozie Mmobuosi, has been the subject of an explosive report of massive fraud leveled against it by the United States Securities and Exchange Commission. The charges are connected with an alleged multi-year scheme to inflate the financial performance metrics of these companies and key operating subsidiaries to defraud investors worldwide. The announcement of the charges comes 1 month after the U.S. SEC formally launched an investigation into Tingo Group. The agency also suspended trading in the shares of the self-described agri-tech company. The U.S. SEC's complaint, filed on December 18, 2023, alleges that since at least 2019, Mmobuosi spearheaded a scheme to fabricate financial statements and other documents of the three entities and their Nigerian operating subsidiaries, Tingo Mobile Limited and Tingo Foods PLC. It adds that the Nigerian businessman and his companies also fabricated the customer relationships that formed the basis of their purported businesses. These charges against Tingo are another blow to the reputation of fintech super apps, which have emerged in the past decade and sought to disrupt banking by offering payment and other services such as instant messaging and trading. Well, let's discuss the implications of this further. Financial analyst Feyi Fawemi is my guest on the program. Thank you very much for your time. Let me start by asking, how does one inflate financial figures to this extent for this long, doing so much damage?
I think it's a question of boldness. Most people will not be able to do this. Most people will not have the audacity to pull that off. But I guess in some cases, some people don't know where the line is, and they are willing to go as far as they can go until they are caught, until or until things catch up with them effectively. So I mean, you can do it because the way the law works is that obviously the law is always behind the crime, So for something like this, you do it, then the law will catch up with you. Most people would not do it because they feel like it is not worth the risk because eventually the law will catch up, which is the case in most cases when you do something like that. But some people just think that, well, I can do it and then I'll just wait for whatever happens to happen. So in this kind of case, I mean, it was a crime, it was something that was always going to be caught. If you say you have a certain amount of money, millions of dollars, and in reality you don't have it, at some point, you would have to show that. And at some point, it will catch up with you. The fact that you don't have that kind of money. So you can postpone it, but you cannot completely avoid it. So it's a question of for certain people whether it's worth doing it at all. Why would you want to do something where the chances of being caught is almost 100%? If you say you have $400 million and you only have $50, your chances of getting caught for that is 100%. But the question is just a question of when. And some people just decide that they can take that risk and then just see what happens.
Well, I stand to be corrected, but isn't it a precautionary measure to always research a company before investing? So how could the company have done this much without suspicion?
I think it's a function of the number of ways in which the investment markets work. So, for example, there are a lot of funds that just basically invest in the Nasdaq. So, say for example, there are 100 companies on the Nasdaq. There are funds that, as a way of balancing out their risk, they will say, okay, say we have $1 million, we will calculate the weight of each company on the Nasdaq and put a certain proportion of that money in each company. This is a way to balance out your risk and say, okay, just in case anything happens, rather than say we want to concentrate on maybe only the top companies or only the bottom or the middle companies. You invest in everything, but you apply your investment by weight. In that case, it's one of the safest ways to invest effectively. So if some companies do well, you gain out of it. If some companies do badly, it does not affect, you don't lose everything. So that investment strategy means that anybody who is on the Nasdaq will get an investment. And a lot of this is done by computers, right? So computers are the ones that constantly calculate and say, okay, here are all the companies on the Nasdaq, and we are $1 billion fund. Here is how much we need to buy or here is how much we need to sell of each company. So getting into the NASDAQ is sort of like almost a guarantee that once you are in there, then certain funds will automatically buy your shares by the fact that you are on there. And like I mentioned, all of this is done by algorithms and a lot of it is done by computers. So, that part is in there. The second bit where it is then a question of how do you get into the NASDAQ? Again, this comes back to the point where people might think that, well, I mean, why would you come and expose yourself? Once you get into the NASDAQ, you have really exposed yourself to all kinds of legal mechanisms. So the FBI can come after you, the US government can come after you, the Security and Exchange Commission can come after you. So you really need to know what you are doing before going in there, which is why, like I said, the vast majority of people would not do it. They will not take that risk, knowing that I don't want the FBI to start chasing me all over the world. I don't want the US police forces or US security forces to come and start chasing me all over the world. So a lot of the onus is on you to make sure that what you are doing, really know what you are doing before you go and get into a legal world whereby you are going to end up in an American jail if somebody finds out that you've been lying. Again, all the things you say, all the things you disclose to the public, all the things you sign off are these things have legal implications. If I publish accounts to the public and say I have $100 million in my account and I sign it off, everybody who signs that off will get into trouble, serious legal trouble, if it is then found out and investigated that actually you never had that money. So it is the moment you sign it off and and make those public declarations, then you are legally responsible for whatever you say. So a lot of the onus is put on you, the person who is going in there to go and to seek investment fund, to seek investors fund, to be sure of what you are doing. I think that's just the way the system works. So you can take advantage of the system, but you can never be forever. You will get caught in a matter of time.
Now, there must have been red flags on this alleged fraud at one point or the other. So who should be blamed for letting this happen?
Well, there are multiple. I mean, there's enough blame to go around. First of all, I think we can start from Nigeria. Nigeria is turning it has behaved like almost kind of like a black hole in this case. So somebody shows up, is making all sorts of claims that is a Nigerian company. He says they have 9 million farmers. The first person who should expose that should be the Nigerian media or Nigerians themselves, right? Before that person then goes abroad. But then, this company was like a normal company in Nigeria. They were sponsoring football tournaments. They had advertising all over the place. They were advertising regularly in the media, all trying to launder their own image. I mean, a serious football competition, one of the cup competitions in Nigeria, was sponsored by them, all the advertising billboards and everything. I remember a friend of mine taking a screenshot and saying to me that how can a company like this, and this was after the American hedge fund had published their investigative report into the but the Tingo company just continued. They just continued advertising and people are taking their money like like nothing is happening. So I think that first bit is the fact that the Nigerian part, that is supposed to be the step one of investigating and exposing a company that is behaving in this manner, that part clearly failed. Again, some important people might have been involved, or maybe stories are killed in the media. So that's the first bit. The second bit, like I mentioned, is when you then go out there, the American side of the ledger expects you to be sure of what you're doing. So I've used, I like to I'll use the Chinese example. A number of years ago, a lot of Chinese companies were leaving China to go and list in America on the American Stock Exchange. Now, a lot of them were exaggerating their numbers. Their numbers were heavily inflated. Some of them were outright fraudulent, but they raised money until somebody, just in the same way that Hindenburg Research did a research on a lot of these Chinese companies, and then they exposed all of them as fraudulent. So the Nasdaq removed all of them. People were prosecuted, but China then took that opportunity to do a serious cleaning exercise. So basically, what the Chinese regulators then did was say, before anybody can go out of China to go and list abroad, then you must pass extremely stringent tests. Because for China, they felt like this is a disgrace to China. You cannot just leave China and go and disgrace China abroad. So before you leave China, you must pass extremely stringent tests, very, very difficult tests now, before you can say, oh, you're going to list abroad. I mean, look at what happened with Alibaba, for example, where the Chinese government cracked down on them and stopped them, pretty much stopped their listing. So that's the second part of it. So now any company that is leaving China to list in the US, you can be sure that it has passed a very, very rigorous exercise before getting there. So I think Nigeria has a responsibility to play because if we allow this one company to do so much damage without any Nigerian response, without any Nigerian measures to try and make sure that this does not happen again, then the people who will pay for it are the genuine Nigerian companies that are trying to list. I mean, there are a number of Nigerian companies now who are looking to list in the US next year to raise a lot of money. Now, all those companies are going to be faced with serious suspicion and they'll be subjected to serious discrimination in the sense that, oh, this is another company coming out of Nigeria. But if Nigeria does its bit and tries to clean up and make sure that, you're anybody that is going outside of the country to go and list in the name of Nigeria, because this company marketed itself as a Nigerian company. They claimed they had 9 million customers in Nigeria. They claimed they had all sorts of marketplaces in Nigeria. So the disgrace, now that they have been found out to be a complete fraud, the disgrace is on Nigeria. And it took an American company to do this research, to fly people out to Nigeria to go and verify and check. Why couldn't this be done by Nigeria itself? Why couldn't this be done by Nigerian media? Why did an American company need to send journalists to Nigeria, to Dubai, to all these places to go and verify all the claims that the company was making? And then when they now finally did that, then it was just a disgrace. So this kind of thing, we need to also look inward and realize that, look, we should not be a place where we almost kind of like tolerate fraud, whereby fraud can be tolerated and grow, and the only time it will be caught, it is when it goes outside Nigeria to disgrace Nigeria. And then, it is non-Nigerians that then do that job, the job that we should do at home. So there's a lot of lessons in here, and I hope that we can use it as a teachable moment and learn the right lessons from it.
All right, now we'll take a break here. The program will continue afterwards. To stay with us. Welcome back. We're still discussing the fraud allegations leveled against the Nigerian fintech businessman Dozie Mmobuosi. Financial analyst Feyi Fawemi is still my guest on the program. Now, Feyi, for potential investors who intend to venture into similar transactions, what precautionary measures should be taken to avoid falling victims of fraud?
Well, unfortunately, it's going to be that, first of all, I think the simplest thing that any investor will now do is just say, when they hear Nigeria, they just say, look, this is too risky. I'll just avoid completely. So that's the first step that many will do. And unfortunately, for so many of those people, we will never see them. So you will never see the person that has $1 million that considered Nigeria, but just decided that, what, I don't want to deal with this kind of trouble. Let me just stay away. The second bit are obviously the kind of people who actually want to invest, but then have to then spend so much money, so much time and effort trying to verify. If you are coming to invest in Nigeria today, for example, I mean, how are you going to do it? How are you going to verify anything? You have to do the work yourself, which is unfortunate. Like I mentioned, using the China example, if a company comes out of China now and says, and goes out to America or the UK and says, hey guys, come and invest in me, you can at least rely on a certain amount of work that has already been done in China to make sure that, the Chinese authorities have staked their reputation on this company. They've given it a clean bill of health. It has passed their requirements, and we can place some kind of reliance on that. So you can then also obviously you still do your own due diligence, but it might be a situation of say 70% has been done by China, so I only need to do 30%. For Nigeria, you have to do 100% now, because who are you going to rely on? If a company comes out, who are you going to rely on to say, okay, the Nigerian authorities have given this company a clean bill of health? So this is unfortunate. I mean, the only way for any investor to do it is either to, number one, say, look, I'm not going to go at all. I can't do this. It's too costly or it's too much for me. Or B, I'm going to do it, spend all the money I need to do and hire people, do all that kind of additional groundwork, or maybe hire some consulting companies in Nigeria who are able to do due diligence. So that's just the reality of what where things are for Nigeria now.
So at this point, the major worry is for the investors. Now, what do you think would be their fate after this staggering revelation?
Well, so the people who invested in this company, like I think uh, as soon as the Hindenburg research report came out, the first thing that happened was lawyers started advertising, right? So a lot of, and this is just the way the American system works. Once a company has been discovered to be fraudulent and has defrauded investors, lawyers begin to advertise service to try and get a class action suit. So they were advertising. I mean, I was seeing all those adverts already in the papers. They were advertising that, look, did you invest in Tingo? Sign up with us, and then we'll get. So they were trying to get maybe 200 or 300 people together and then launch one lawsuit. So the question now is this: what will happen to investors is obviously everything that belongs to the company will be seized. Anything, any asset that they have, and then they will sell the asset, and whatever is left can then be returned to investors. I don't know if the company has any asset, if there's anything that can be seized, but whatever it is that can be seized will be seized, sold off, and paid off to investors. So obviously, most investors have lost their money. Many will not get anything back. Maybe some might get maybe a small percentage back, but the money is gone. I mean, the company doesn't have any assets, it doesn't have any money. Everything was built on a lie. But the other bit is that the system would at least try to ensure that justice is done, which is by sending people to jail, trying them, sending them to jail to act as a deterrent to other people who might try it, and at least give some investors closure that, look, okay, we couldn't get your money back, you couldn't get your money back, but at least the person who defrauded you has been tried and convicted and has been sent to prison.
So the man at the center of this whole saga, Dozie Mmobuosi, has, as expected, rejected the fraud allegations, describing them as baseless. Now, as a financial analyst, how do you think this would pan out in the end?
Well, I mean, that's what he's going to say because I mean, anything he says has legal implications. So if he admits to it, it just makes his trial shorter. So he has to obviously reject it and present his own case, and that's how it's going to be. The matter will be settled in court. So when he will go to a court, he will defend himself. The prosecution will present their own case, and then the jury or the judge will then decide and say you are guilty or you are not guilty. So anything he's saying now is maybe it will be part of his defense or part of his prosecution. So if he comes out and admits that yes, we made some mistakes, we made errors, then obviously the lawyers are paying attention and that will be used against him. So for now, what he's trying to do is trying to ensure that maybe he gets a trial that favors him in some way or the other. But the case will be a trial because, I mean, where a case of, a clear case of fraud has been alleged, then he's going to go to trial. So wherever he is, he will probably be at some point arrested and then maybe extradited to the US, and then you have his trial there.
Well, Feyi Fawayemi, financial analyst, thank you for giving your insights. Well, that's it on this episode of the program. Thank you for watching. See you again next time.